theme, what we did was we are opening up just to give a quick chat. It's not going to be a long show, just a quick chat. I want to talk to you very quickly about refinancing. It is the greatest thing right now happening. The reason for it is that interest rates at all-time low, 2.29, some companies 2.3. It is the greatest time. Rates are going up. Listen, rates are definitely going up. So I'm encouraging you that if you're on a rate like I am, of a 5.5 or a 7.0 or a 6.0 or 4.75, even a 3.9, take advantage of the interest rate. Interest rate is at the all-time low. So you want to get out there and you want to take advantage of before the rates continue to go up to the point where you may not be able to take advantage of the interest rate. Okay, just want to share that with you out there. Also, be careful. Remember, I tell you about the ticket takers. Those are loan officers that basically take down information, have very little information to share with you unless they go back to see the supervisor, and then they come back to give you some more information. Just want you to be very, very careful and be educated on the programs that are out there and on the program that you're asking for. For example, I asked them for a FHA Streamline. Okay, that's FHA Streamline. And what FHA Streamline is that you're on an FHA product, you're on an FHA loan. So you can do just rate and term, and rate and term is a tangible benefits because you are lowering the interest rate, which is lowering your mortgage payment. Okay, it is a tangible benefit. You can save yourself anywhere from $300 to $400 on your payment, depending upon what your current payment is. You can save yourself a lot of money that way. Okay, don't let them try to give you something other than what you asked for. What you're going to find is that a lot of don't even listen. Okay, I'm on FHA loan. I had a servicer, service company, and I am gonna put them on Jump Street Blast. Uh, the people there are very, very nice. They're very, very helpful. But when you're dealing with the loan officers and of this particular company, they just don't listen. And I'm speaking in terms of Carrington Mortgage. They just don't listen. And I'm going to talk about BOA, Bank of America, too. Because when you do an FHA Streamline, FHA sets you know, on all of their products, they set the guidelines. As you know, FHA sets the guideline for the whole industry in the first place. So we already know that. Secondly, be educated on the FHA Streamline because they do have a 15-year FHA Streamline. Don't nobody tell you otherwise. I had a loan officer to tell me, no, we don't have an FHA 15-year Streamline. Oh my God, that just destroying your credibility already. Um, he because a lot of these cats think that you don't know. And they'll come back and they'll talk. Even if you tell them, "Hey, look, man, I'm very much aware of what I'm asking for. I'm very much aware of the products. I do know, blase, blase, this." It's just like going one ear and out the other ear, and they come back with anything other than what you said, and that's when you flip out on them on that. So I had a guy from Carrington Mortgage that came back to me. I told him I want an FHA Streamline. I told him what term that I wanted. I want a 15-year term. I'm currently on the 20-year term. The guy goes and comes back, a day later. I'll talk to you, chit chat, ha 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 he ha. We did all that stuff. The guy goes and he comes back. He says, "I got great news for you, Rick." I said, "Yeah, what?" He says, "I got your payments, at about 1375." I said, 1375. Wow. I remember when I first got the loan, my payments was at 13 something. I don't know, 1340 or some stuff like that. Now, and I already talked to Bank of America prior to. Bank of America guy, yeah, I'm gonna switch a little bit. Bank of America guy told me, he says, well, um, I can get you about 1378. I said, really? He says, yes. I said, wow, his interest rate is low, man, 2.4. I said, wow, that sounds great. I said, what's the term on that? He said, that's a 30-year term. I said, I don't want a 30-year term. Why would I want a 30-year term? And he goes, well, it's the best thing ever. You're going to do. I said, no, I don't want a 30-year term. That's not what I asked you. I asked you for a 15-year FHA. Oh, man, we don't do that. Really? You really don't do that. Yeah, yeah. I said, are you sure? He said, yeah, yeah, really don't do it. I said, really? I said, well, at that moment in time, I don't want to talk to him anymore. Okay, because I'm either talking to a moron or talk to someone who think they want to be slick to try to convert me over to a different term so they can make more money. Because see, FHA sets that guideline of how much money that they can make upfront on the upfront fees and how much the FHA would pay them in the rears. A lot of people don't know they get paid in rears. They get paid in the rears. Okay, so to them, it's not enough money because ticket takers are not like mortgage brokers. Mortgage brokers pretty much get paid on all of the fees. Okay, they do. They get paid on all of the fees. What are the fees up front and they get paid in the back? That they get paid on the whole thing. Where with loan officers that work directly for mortgage companies, they get a percentage, and a percentage may be 20%, 30%, 40%. It all depends on the tier level that they've done. And what I mean by tier level is it all depends on the number of sales that they've done. If they've done 10 sales thus so far within that month, then they may move from tier one to tier two, or it may be called a different name. Maybe it's called Colonial One, Colonial Two, whatever the name is for the stage, for the pyramid stage of a building. If they did 10 deals, on the 11th deal, they may get 25% or even 30%. If they've done 15 deals, they may get 30% or 35%. And of course, if they've done over 20 deals, then they may get 40%. So a lot of them are trying to reach that percentile. I'm not mad at them. I mean, do your thing, man. But service the people too, just as well. And then to listen, because you'll get that customer back. But a lot of them are dealing with mortgage companies that every day their phone is just on the ring, ding, 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 ding. And so they don't really hold the valuability to the customer. And the way that they were trained, they're trained for volume. They're not trained for actually truly customer service. They're trained for volume. And some of them are actually trained. The customer don't know what the hell that they're looking at. They don't know what the hell they want. Yeah, okay. They say okay, fine. Yeah, okay, I got you. But then you're gonna give something else. Okay, flip back. So Bank of America guy did that. Came back and said, "Hey man, it's a 30-year loan." I said, "Man, I don't want that. I told you that I want a 15-year FHA stream. We don't do FHA finance." Well, I know that's a lie. Okay. So basically, what I just did was call my local Bank of America branch, set up an appointment to go in to see the loan professional there. And I asked her on the phone, which I already knew, but I asked her anyway, because my loan was one time serviced by Bank of America for over 15 years. So I already know. So I asked her, and I said, "Oh, by the way, I'm interested in an FHA student." She said, "It's fine." I said, "Great." I said, "I'll come in and I'll talk with you on Friday." Okay. She said, "Okay, cool." I set the appointment. Boom. That appointment was set. So I know I'll be going in powwowing with her on that. Now, flipping over to Carrington Mortgage. There's my current servicer on a FHA loan, which is under HUD. So the guy from Carrington Mortgage, really interesting guy. I mean, very friendly in voice, very strong, lively voice. "Rick, I got you. I'm gonna get back with you. Can you give me a day, and I'll get back with you on what we can do?" I said, "Okay, great. Please get back with me." The guy called me back. "Rick, I got you on a 1379." I said, "Really?" He said, "Yeah, oh man, you're gonna love them. Saving you a lot of money. You got some late fees in there, but don't worry, we're gonna waive the late fees." Now, of course, under the new Biden program, that Biden adds 32, I think it's 32.50, towards your closing costs. Okay, and that's basically will probably be ruled under conventional loans. I'm not too sure if it's applied toward FHA loans or not, but nevertheless, if it is, it's applied to FHA refi. Because FHA Streamline comes with an interesting package of its own. If you have some late fees, then those late fees can get waived within the FHA Streamline. Keep in mind, on the FHA Streamline, the minimum cash out is $500. Now, that $500 can be applied toward closing costs. That $500 can be applied toward maybe you have a blockage. Maybe you have one um, trade line that's like a blockage, and so that $500 can be applied to that. Basically, there is no cash out under FHA Streamline, but a minimum wise of $500 is. Now, with some of the companies that's servicing you under the FHA, this is what they'll tell you. Hey, look, you got to make your monthly payments. We'll use your monthly payment as a down payment. Well, that just so they can add up the money, okay? And I'm not too sure if they should be doing that or not. I don't know yet. Waiting on my call to come back in from HUD, so I can talk to HUD about that just to find out. Are they doing a little tricky stuff here, which I don't mind, but I just want to know just for my own knowledge of knowing. And so therefore they ask you for your down payment to be whatever your mortgage payment is. You make that within that month time, and then what are the fees that they're going to charge you for the upfront fees and the back fee? Trust me, you got to worry about having excessive fees, especially on FHA Streamline. You are totally protected. This is what I'm telling you. You are totally protected. So anyway, the guy came to me and said, "Hey, man, 1379." I said, "Man, sounds great." And he says, "I'll see you the docs." Whoa, 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 slow your roll a little bit. Is this what term is this? He said, "Oh, this is a 30-year term." I said, "I don't want a 30-year term." I said, "I'm on a 20-year term now. Why would I want a 30-year term?" "Oh, Rick, it's great for you. You can still make your current payment right now, and then you go, whoa, whoa, whoa. I don't need you to educate me on how to pay down my principal. I'm very much aware of how to pay down my principal." No, no, no. Some people are not very much, sir. I do a radio talk show. Come on, I've been doing one for over 20 years. I've been a mortgage broker for over 21 years. I've done FHA Streamline. I've done FHA loans. I've done VA loans. I've done commercial loans. I've done non-conforming loans. I've done what they call prime loans or conventional loans. I've done these loans before. I may not be doing the residential end now, and I diddle daddle within commercial. I said, but I'm an insurance broker, but I diddle daddle within commercial just as well. So let's cut through the BS. That's all I want is the right results. Can you or can you not bring me back what I'm asking for? Well, the best I can do for you is probably get you a 22 and a half term. Whoa, are you listening to yourself? Are you listening to me? Why would I move from a 20-year term to a 22 and a half year term, which is no such term, which is again, no such term? So why would I want to do that? And I said, it doesn't make sense. Are you listening to yourself? So the point that I'm making here is that don't you fall entrapment because they're going to be spitting out some things at you and not listening. If you have a ticket taker, and that's a loan officer that works directly for a particular mortgage company, they basically are ticket takers. If you have a and a ticket taker is someone that can't answer the questions that you ask them, probably some of the questions, but not all of the questions. Always got to resort back to talk to supervisors, resort back to talk to underwriters, so they have very limited knowledge. Okay, very limited knowledge, and I'm not trying to be an arrogant individual because I'm not. I do have very short patience with ticket takers because they don't know nothing, and I think some of the basic concepts they should know, to be able to do. First of all, key number one: listen to the customer. Listen to your client. In the mortgage industry, we call you clients, not customer. Customer is a group. You get them in all the time. You got to move them in. Like cattle, got to move them in, move them out. Client is who you specialize in. Client who you listen to the client and you tailor the loan to the client's need. You make sure that you meet the tangible benefit for the client. Okay? And tangible benefit, I mean, it makes sense to the client. It's a benefit factor for the client. And you listen to the client. When you get someone that don't listen to you, you don't get into a controversial argument. Please don't waste your time. And trust me, they're going to pee you off to the point that's going to make you want to, but you're better than that. And I'm going to say it again. You're better than that. So all you do is just sit back and say, hey, look, man, you know what? Thank you, but no thank you. Just cancel me out and move on. Move on until you find someone that's going to listen to you and do the program. Know about the programs. If you are purchasing and you want to purchase it on a FHA, then know about how FHA qualification is. And you go to HUD website and you can type in FHA loan, and it'll give you the qualification for FHA. What are some of the basic qualifications? Hey, be a human being and be able to breathe air. Two, be able to have to prove your income, whether it's self-employed or whether you have a W-2. Okay, under self-employment, they're going to be looking for 3 years of your financial statement, 3 years to show that you made profitability. Now, be careful here, my self-employed people, because you always do this to yourself. You always hurt yourself. You say, "Hey, I made 100 grand." Oh, okay, man. So I should qualify. Yeah, but you wrote off everything, and everything that you wrote off, you wrote things down to $15,000. So now your profitable income is $15,000, not 100 grand, because you said that you lost $85,000. So you're not going to get credit for hitting the 100 barrel if you wrote everything down to the $15,000 limit. Then that's what you're going to qualify for, and you probably won't qualify based on the size of the loan. $15,000 a year is not going to get you past $30,000. Okay, so your house is worth 200,000. You're not going to get no $200,000 loan with that low income. Yeah, I made 100,000. No, you didn't. You made it, but you wrote off everything. So be careful in there when you're doing that. Next, know the product. It's called product. That's the terminology. Know the product that you're in. Is it a traditional refinance? Okay, great. What type of refinance? Meaning, is it a refinance under VA? Wow. Is it a refinance under FHA? Okay. Is it a refinance under the USDA? Okay. So because each one of them set their own particular guidelines. So know what you under, read their guidelines. Go to their website, read their guidelines. So when you're talking to a ticket taker, okay, I'm not telling you to be insulting to them, but when you're talking to a ticket taker, you understand what you need. And so when they're throwing something back at you that doesn't comply, like, whoa, wait a minute. It's my understanding that under FHA Streamline, I don't have to prove income. There is no appraisal done. Technically, it is, but it's called a drive-by appraisal. What a drive-by appraisal is a fair assessment of the area in which you live, and they use it fair assessment within a 6 mile radius. And that's the maximum radius that a appraiser can go out to. Normally, they want to keep appraisal within a 3 mile radius. But if they can't find property that's going to coincide with yours, then they can go out 4 miles, 5 miles, and even up to the maximum of 6 miles. And they ask them for two comps to prove the comp that you need to confirm the value, and another comp, because usually if they go out 6 miles, depending upon the lender, they're going to ask the appraiser for one more comp. So usually have to do that. But nevertheless, when they do a drive-by is just a fair assessment. You look at what the houses uh, on the same style, the same square footage sold for within your range. Okay. And then you just put a fair assessment value there. It's a guesstimation, but you put a fair assessment. And so that's what will come with a FHA streamline. Okay. Bank statements are not required. But again, please keep in mind that certain servicers do have permission from FHA to ask for a few more particulars, and they may say, we need a 6 months bank statement. So don't get offended on that. Boom, you need a 6 months bank statement. Yeah. Okay, what are you looking for? What are you looking for? Usually they're looking for to make sure that you have money in the bank to cover the new mortgage, basically. And you're looking for you really to kind of like have 6 months of reserve, not so much as 6 months of the mortgage, but 6 months of your overall expense. Because on the application, you are putting down what your light bill is, what your gas bill is. You giving them that assessment, and so they want to make sure that you have that particular assessment. Now, some lenders don't worry about it, others do. Okay, so don't be alarmed if you get some that do. But and don't fall for the yoki doke. Okay, because I had a lender that tried this yoki doke. You have to bring your um, your mortgage payment. You have to bring it to the closing table. And again, this is with Carrington Mortgage. Sorry, Carrington, I do like a lot of other stuff that you do, and I'm gonna give you accolades for that. But for right now, I got to put you on Jump Street Blast with some of your ticket taker loan officers that really think they truly need to go back to get some training. They really do. A lot of them are very when they can't force you to take what they want, they cop attitudes and they get attitudes and they say some wrong things, which I'm sure that Carrington Mortgage do not want them to be saying some of the things that they say, and file a complaint against them if they do it. File a complaint against. I usually just I brush them off on some instances, but this particular loan officer, not the one that tried to sell me recently, but the one that tried to sell me over a year ago. This particular loan officer was an a-hole, period, because he really thought that he knew everything. Any problems that occur, he avoided, okay, because he don't know how to handle it, because they're used to a quick turnover, quick turnover, quick turnover. That's what ticket takers do. Loan officers deal with problems that occur and they rectify the problems that occur. They talk to you, they get certain documents from you, and they rectify it. If it's a glitch on your title, they help you get rid of that off your title. That's not a underwriter's job. That's the loan officer's job. Sometimes the company have processors, and then a processor will do that. But the processor, here's the interesting thing. But the processor don't contact you to get whatever document that is needed. She tells the loan officer who's in terms contact you. So now he gets it to give it to the processor. Back in the old school days, hey, that's what the loan officer did. He go out, he get whatever he needs, and he get the thing off of your title. Okay. If there is any garnishment being done, if a refi can pay it out, they get the letter, get the agreement, boom, it's going to pay it out. So the new lender will understand this is not going to tap into your debt ratio. There's something to do. If it's a FHA streamline, you're gonna really need to rectify that situation with them, get it paid before in order for the streamline to continue. So just to let you know that, because there's basically really no cash out on FHA streamline. Yeah, I know I told you about the 500, but I also told you how it's going to be utilized. So if you owe $1,000 or $1,500 for a particular lender and you're behind with them, FHA refinance streamline is not going to pay it out. FHA refi will pay it out, in which you will have to qualify for the FHA refi with your credit. You got to qualify with the income. You have to qualify with reserve capital in the bank, and that's usually 6 months. They're looking for 6 months of mortgage payments, and then also in that process, they're looking for you to have 6 months of your natural bill, light bill, gas bill, water bill, etc. That's what they're looking for in that. Okay, so be aware of that. That's FHA refi. That's also under FHA. I'm sorry, also under conventional loans just as well, and even under non-conforming loans too. That's challengeable loans where the debt ratio is a little wider. Keep in mind, FHA set the guideline for debt ratio, and that's 24/36. Okay, under non-conforming, the debt ratio spreads a little bit more, giving you a little bit more room to work with. Depending upon the lender that you go through, they'll set the term for it. It could be as high as a 44% on top, and on the low bottom figure, it could be 40. Okay, what do you mean by 24/36? Well, what I mean is that all of your income, take your monthly income, your gross. What your bills are currently should not supersede 24%. Okay. Now you're getting a mortgage or you're getting another mortgage, which is a refi. It should The total of your current bills, along with the new mortgage, should not supersede 36%. That's under conforming. That's under FHA refi. Okay. Under streamline, you ain't got to worry about that. Okay, you don't have to worry about that. Okay, because you're already in a loan. Most people that do FHA streamline is basically doing it for rate and term. That's all you're doing it for. Other than that, why would you do it? There's no reason. Well, I just want to do it just to do it. No, there's no reason for that. Most people do it under rate because I want to lower the rate. Under term, I want to take the term down. Sometimes people take it up, but in most cases, they want to bring the term down. Okay, a lot of people will frown up on you if they don't pay loan down to 20 a year term, and now you want going back to a 30-year term. They don't want to go back to 30 years. Okay, they're gonna look at their age. Hey, man, I'm 65 years old. Why would I go back to a 30-year term? In 30 years, I take 30 years, I'll be 95 years old when I pay the damn loan out. Who the hell wants to go back that far? Okay, so you want to look at these things. Hey, I'm 50 years old. What the hell? I want to go back 30 years. I'll be 80 years old when I pay the son of a gun out. So people usually want a shorter term. Shorter term works when interest rate is low, like they are right now. So if you're currently on a 28 year, you may want to take a look at a 20 year. You may even want to take a look at a 15-year if it works for you. Okay? You know, so that's the purpose of refinancing. Rate and term is the purpose on the FHA streamline. That's the tangible benefit, meaning that's the reason and that's the justifiable reason why you're doing it. Okay. Under refi, same thing. Usually with refi, and especially with interest rates being low, people want to pull money out. Okay. What you want to pull the money out for? Well, I want to get a fence bill. Depends on where I live. I want to have a ground pool built up. Okay, that's going to add to my value. It's adding what? To value. What you want to do? Well, I want to redo my deck. Okay, redoing your deck, improving on your deck can add more to the value. Well, I want to extend my garage from a one-car garage to a two-car garage. Once again, it's adding to the value. Hey, I want to add another wing on top of my home. Great. Once again, it adds to value. What are we? Well, my daughter is getting married, and I want to pay for her wedding. Okay. Looking at you, looking at your age, how's your daughter? Okay. People understand that. Okay, boom. That's not going to stop you. Hey, I want to buy a brand new car. Oh, okay, something that decreases in value, huh? But again, that's not going to stop you. What type of car? This is going to ask you a little bit further questions on it. What type of car? Hey, I want to buy a vintage car. Okay. Oh yeah, because in the long run, that's going to increase in value. Hey, I want to buy some paintings. I go to art gallery. I buy paintings from Leo Massalone or some new artists or old artists that's painting starting to take in value. Hey, I will use the money for that. Hey, I want to use the money to buy other properties. I want to buy income properties. Again, you can do that as long as you have the equity in there to do that. Now, again, keep in mind, you'll find some lenders now, man. Oh, no, I want you to buy another property. I don't know about that. Hey, fine. You ain't got to settle for them. If that's what you want to do, then say, okay, you know what? Thank you very much for your time. Then boom, I'm moving on because I'm going to get what I want to get. Now, if I can get it with you, oh, well, I'm going over here and I'm going to get it over here. So you're not going to make me change my program because you've done your homework. You are an educated consumer, which is indeed the best customer. You've done your homework. You understand what you need, so you can stand firmly in your square and you can defend what you want, not take what you say to me as if I'm a 2, 3-year-old, 5-year-old kid. And I got to, oh, okay, well, I guess you're right. Or no, not unless you're wrong and they educated you on something, then again, be big enough and good enough to accept, and then swerve it around and make your decision on that because you don't know everything, but don't let the ticket takers take control of you as if, come on, let me guide you by the hand and move you down the line. That's how come you're an educated consumer, which is indeed the best customer because you're the customer that lenders want. Okay, they don't want people who don't know nothing. They want people who know something. Mostly people that don't know nothing usually going to lose something. All right, so they want people who know something. And then two, it gives you a better defense against these ticket takers. All right, if you get a mortgage broker, God bless you, yay! Because you got somebody that knows something, you got somebody that knows how to treat you, and you have somebody that's going to bring you back what you asked for. And if there is any kind of problem, they're going to talk to you about the problems, and I guarantee you, they're going to have solutions. It's going to help you get over that problem. Guarantee you. Yeah, we're damn near dinosaurs, but a lot of us is coming back. So these ticket takers can kind of like give you a bad name. Now, to be fair, there's not all ticket takers are like that. You do have some very good, strong uh, 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 loan officers here in Illinois. One of the black banks, Seaway National Bank, got some very, very good, strong, and good loan officers here, okay? And they will work with you. There you go. Bank of America got some good, strong loan officers, and they will work with you. But you could find a ticket taker, okay? I found them just by calling in, talking on the phone. I probably talked to some guy that's in California somewhere. I don't want to talk to you. I'd rather go into the bank, eyeball to eyeball. I can look at you. I can talk to you. What you say? I can see you. All right, because I don't know that they do Zoom a lot. They didn't do Zoom with me, so I'm sure they don't do Zoom the way you can talk to them and see them either. So go into the bank. If you want to deal with banks, go into the bank, meet them and talk to them. Credit union, one of my favorites. Credit unions do great jobs. Great jobs. They do great jobs. Very few credit unions that I can put on Jump Street Blast, and I can't think of one to even put them on Jump Street Blast. They do such a fantastic job. Great Lakes is an excellent credit union. It's a military credit union that opened up its doors for consumers now. So you don't have to be in the military or be part of a military family. And they do very, very, very good job. And they do FHA. But crime-free credit unions do not do FHA streamline. Okay, so be aware of that. Credit One is one. They'll do FHA loans, but they won't do FHA streamlines. Okay, it's some money in it to them because keep in mind the loan officer there they get paid a percentage. So they're a little percentage. If the total deal makes $5,000 and they're getting 20%, not a lot of money to them. Okay, so I'm not gonna break my neck, do all this, and so they try to set them to where they can make some money and be able to continue. What's good about being a ticket taker and working for the bank or credit union is that they have a system and a wealth of people that they get in every day. So you can close anywhere from 4, 5, 6, 7, 8, 9, 10, 11 loans in a day. It all depends on how good you are. Okay, you can really do that. It all depends on the credit union because some is a little slower, so they may close 2, 3 a day. That's still good. If you close 2 loans a day and you're working 5 days a week, you just did what? Yeah, there it is. There go the number. So imagine if you do 4 or 5 in a day, and then in run of a week, boom, there it is. Okay, so therefore, some of them kind of get a little, I ain't got time for this. I mean, what the heck with you next? That's not how you do business. Business like that is very bad. And then report them on that factor. And then sometimes you can find out, you can see where they get it from because when you talk to the supervisor, you go, oh boy, I see where you get your stupidity from. So you got to deal with that stuff. But then again, sometimes you can get a very, very good team that will work with you. And that is the best end. As I'll go back to close out with Carrington Mortgage from the two idiots that I talked to, loan officer, one older, they really need to have better customer service ethics because it's very poor with them, very, very poor. But as an overall servicer, Carrington Mortgage is a good overall servicer. They will communicate with you. They'll get you information. They say they call you back. They're gonna call you back. If they say they work with you, they will work with you. Overall, I mean, if I had to rate them overall, just on that contents, except for the loan part, refinancing part. I have to give them an A. Okay, but when I add the refinancing part in there, it brings their average down to a B. Back in my day, they said, "Well, you still did a great job, B plus B." Okay, so you got a B plus in the whole deal. But overall, they're very, very good service. Overall, for Bank of America is very knowledgeable. You can get good information from them. They will work with you. Calling them and being on hold, that's another story. They got to work on that part, so you can deduct some points from that. But overall, as a servicer of the loan, they will. But watch out for them. They'll slap fees on you like in a heart attack. Fees too. You say, whoa, what kind of, whoa, shh. How much is this fee? God, I mean, yeah, that's what they do. But overall, servicing, they do a good job. But and overall, communicating with you, if you're changing over your homeowners insurance, getting out the deck page for your insurance agent, they're very, very good. That Carrington the same way. They're very, very good at that. Okay. So with that said, I just wanted to just share some information with you going through the refinance stage. And sometimes, like I have people that I talk to, it turns them off. I ain't got time for this. No, I don't want all that tension in my life and my business. Okay. Refinancing, um, you may go through one or two or three before you settle. When you understand the program and when you know the program, you don't have time to be frustrated. Remember, you're the chief executive officer of your world. If you don't push and lead your world, somebody else is going to try to lead your world for you. And they're going to lead you down the wrong path that you don't want to go. So don't get frustrated because someone made an attempt to lead you down the path. You stop them at the border. Whoa, I'm going this way, buddy. This is what I asked for. I didn't ask for this stuff with it. I don't want to hear all that. I'm headed over here. Can you or can you not? No, okay. Thank you very much for your service. Move on. I don't hear all that stuff. Move on to the next stage. Next. Okay. What can you do, sir? Or what can you do, madam? And then you'll get what you want. So just remember, try credit unions, try banks that's feasible for you, and listen, understand the program that you are looking for. If it's conventional and you want to refinance under conventional, you certainly can, and understand what is required of you on a conventional, and make sure you have all of the tools in place, all of the documents in place. Now, check your credit report before you do it, because if you're in the state of Illinois will put a lien on you very, very quickly for some taxes. You want to know some taxes? Wait a minute, I didn't even know I wasn't knowing no damn taxes. Where the hell did that come from? Contact them. One thing about Illinois that I love. You can contact them and they will work with you. Yes, they will. Now I know COVID-19 sort of took things and made it harder to reach them. Okay, now that things is opening back up, you should be able to reach them a little better, and then it will get even better than that. Okay, me personally, I've been in the mortgage industry, and these cats stay on the job for 30 years before they retire. I happen to know the manager that was managing that department. Didn't know him interpersonally, but just knew him from a business relationship. So I was able to go back to my Rolodex, roll it over, got his number, call him, and then he was able to help me and send me exactly what I needed, and I was able to get what I needed. Okay, eventually I paid out the portion of what I owe. I think it was like $1,100, but I paid that out after I didn't go through with who Carrington on the first guy, ticket taker. I made sure that did not become an issue if I wanted to do again. IRS. Oh, there it is. Had me down. Hey, yours 25,000. How the hell did you figure that? Had to go back and forth with them on that. Finally, we got that rectified. Now, you would think IRS will change everything for you and have it. They don't do nothing. If you don't ask them to do it, they don't do nothing. Volunteer. You got to go, hey, IRS. Yeah, what's up? Hey, listen up, man. You got me down for $25,000. I don't even owe y'all that, man. I got my letter from you. Y'all send me the letter back. And so you pretty much apologize but nevertheless, it's still showing up on my title. Okay, what do I need? And they'll tell you what you need: a certificate of release. A certificate of release of that. And they'll send it to you. Hey, can you text me one? Hey, they'll text you and they're gonna mail it to you. Okay, they're gonna do both. But you can put that in too. Can you text me and mail me one too? Yep. They'll give you that. And so when they do that, now you have it. So if you ever ready to refinance again, then you can present that to your loan officer, who will present that to the underwriter, in which they'll take it off title if you want to do that way. Or you can go to a title company in Illinois. The largest title company is Chicago Title, which is very known all over the world. Well, and then the second largest is Stewart Title. I recommend the top two. I really do, because they underwrite for a lot of the other smaller title companies. Okay, so you want to really go with the top people. Okay, Chicago Title #1. So you really want to go. So you go down there and you say, here, I need you to. This is my release. I need you to take this off title. They'll charge you 3, 4, $500, and then you get it taken off title. So you can do it that way, or you can wait until you refinance again. But don't lose that certificate of release. Make 2, 3 copies and don't lose it. And so, boom, you have it. So when time for you to do that, boom, you have that. Okay, you're going to find on my title that's going to show that, oh, IRS 25,000, but here's my certificate of release. I don't own that. Also, you're going to find that I owe the state of Illinois $3,000. That's not true. Here's my proof that that has been paid. Boom, there it is. Okay, and they'll take that stuff off title for you while they're going through the process. So, pour your credit report, get your credit report. But remember now, when you're doing mortgages, all three bureaus are pool. Okay, all three, not one. I know TransUnion is mostly used here in the Midwest. That's fine, but you need the other two. Okay, they all three bureaus are pool, so you need to look at all three bureaus. Okay, if you're doing a refinance, a regular refinance, depending upon the lender may take the high score out of all three, or the lender may take the middle score out of all three. So just know between it. Ask the questions too when they qualify. Hi, Mr. and Mrs. Thomas. You got qualified, man. Great news for you. You got qualified. We're ready to go, and I can certainly be able to get your loan in process. Well, thank you, Ralph. I do appreciate that. Let me ask a question to you, Ralph. I know all three bureaus was poor, and I'm aware of my score. Do this particular refinance program, how do they grade me? Are they grading me on the middle score, or are they grading me on the high score? Ooh, I'm talking to an educated consumer. Boom, there you go. Okay, a lot of times people don't ask that. Well, what's on the middle score? We go by middle score. What's the interest rate again? Well, the interest rate is going to be at 3.9. Wow, 3.9. So you go by the middle score. If the middle score, hypothetically speaking, just hypothetically speaking, if the middle score was like my high score, what would my rate be with you? I'm just curious. Well, if the middle score was the high score, I mean, if the high score was the middle score, excuse me, then you're probably looking at about a 3.4. Wow, makes a big difference in dollars and cents in run of a year. Hmm. If that's cool with you, move on. Okay, let's go. Let's get it done. If that's not cool with you, you want to shop a little bit. Say, well, you know what? I want to talk it over. Use the old famous thing that people say. I want to talk it over with my wife, and or if you don't have a wife, I want to talk it over with my fiance, even if you don't have one. I want to talk it over with my mom. Oh God, your mama's boy. No, okay. I want to talk it over with my fiance, and I'll call you back tomorrow. Yeah, I'll call you back tomorrow. What time tomorrow? Well, I get off work. Let's talk. Let's say around by 4 o'clock. Will you be there at 4? Yeah. Okay, 4. They give you plenty of time to challenge through another lender and see what's. But you're asking them up front. Hey, John. Yeah, we can do the loan. I do have to take a quick peek at your credit score. It won't count against you, but I want to just do a quick peek so I know how to qualify you, what grade to put you on. Okay, boom, 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 quick peek. Okay, John, you did the quick peek on the credit score. What program are you going to be offering? I know it's a refinance program, of course, but what grade level would I be on? I mean, are you using the middle score to qualify me? Are you using the high score to qualify? Well, we're going to use the high score, Mr. Johnson. Oh, okay, wonderful, wonderful. What type of interest rate? Well, I won't have that right now for you, but tomorrow I can have. Okay, sounds great. Let's talk tomorrow. Now, the guy who's supposed to call back today at 5, guess what? Boom, he been moved to tomorrow. I ain't gonna call you and tell you. Okay, tomorrow at 5. Okay, you may call me. I'll talk to you tomorrow at 5. Okay. Or, hey, John, glad you called. Uh-huh. I need to get back with you tomorrow at the same time. I'm not giving you no runaround because I'm a straightforward guy. If I don't want to be bothered with you, I'll just tell you up front. But so let's talk tomorrow. Ran through some stigmas that I got to work on, or I ran through some problems here, personal problems. I need to rectify that because it requires my immediate attention, and then we will be able to talk tomorrow. Okay? Yeah, yeah. I know I told you 4 today. Let's talk tomorrow at 3. Just move it up a little bit. Make him feel like that he's important a little bit. Oh, okay, okay. We'll talk tomorrow at 3. Boom, end of story. Now you get your stuff back from old boy tomorrow. Old boy say, hey, look, man, we can get you at 3.3. Woo, you can? Yeah, well, rock and roll it. Okay. Now you call up the other guys. Hey, John, thought about this thing, man. We're gonna take a pass on that. Well, why? What rate's too high, John? I'm just not going to sell it for a 3.9. Okay. I mean, to me, it defeats the whole purpose of me doing a refi. I'm not doing a refi to get a second best. I'm doing a refi to actually truly save me money. And I just don't feel 3.9 seem money. Well, sir, you had a 4.5 right now. Yes, I know, but I just don't feel comfortable with it with a 3.9. Well, John, I appreciate the help that you give me. Well, I just wanted to, what my supervisor. Thank you, John. Thank you so much. Boom, end them, cut it off, boosh, get rid of them. You know. And oh, by the way, they kill me with this stuff. Um, hi, hi, Mr. Johnson. We're talking to you on a recorded line. Okay. Here's how you get them back. Oh, great, thank you. Because you're talking to me on a recorded line here. I have you on a recorded line here just as well. Pause. Don't say shit. Let them do the next talking. I'm sorry. What did you say? You're talking on a recorded line with me too. So we both are talking on a recorded line from 2 separate places. What can I do for you? You see, now when I get mad, I can't say something I want to say to you. They should be saying something on their own recorded line, but maybe they can edit it. I don't know. But I'm gonna keep you honest. You're on the recorded line. You may not be on the recorded line with me, but you don't know that. So I'm gonna keep you honest. Okay, you call me, hi, Miss Johnson. Right, right. This is Johnson. Yeah, right. This is Lance Johnson. I'm talking to you, sir, on a recorded line. Hi, Lance. Thank you for calling me. I'm talking to you on a recorded line here too. What can I do for you? Get it out the way. You'd be surprised. Because they like to throw out little lies here and there. Ticket takers, ticket takers. Just remember, try credit unions first. Okay, look them up. Try them in your your neck of the woods. Um, Try if you mortgage companies are usually owned by insurance companies, are usually owned by banks. Okay, and insurance companies usually own banks and usually own mortgage companies. Okay, so just be inclined with that just as well, and shop it around and get what you want. You can practically go to 5. I mean, if you can't find nobody good out of 5, maybe you need to stand down a little bit, okay? Because you should be able to find somebody good out of 5. Out of 5 is usually the maximum. Usually over the 6, they ain't gonna start taking a dink on the credit, okay? Because it's not like cars. Cars, you go to 2, third one, dink. So you want to keep that in mind, and so you'll be able to balance yourself out very, very well. And I just want to share that with you So take advantage of the low interest rate. Don't let them ticket takers discourage you or stop you from getting what you want to get. Take advantage of it. You're going to be A-OK. I guarantee you that. And God bless you, and may He forever keep you. I'm Rick Montgomery. This is Mortgage Talk. No Mortgage Talk theme. No, no mortgage talk theme. Why not? I don't know. This is on my mind, and I have to share it with you. And I haven't been on in a long time, so I just wanted to just put that out there to you. Thank you guys so much. Appreciate